Good afternoon. Thank you for joining us today. My name is Jonna Emke, and I'm a Senior Marketing Manager at CoreLogic. I'd like to welcome you to today's webinar, The Role of Data in the Digital Mortgage Journey. I'd like to start off with a few housekeeping items. All attendees today will be muted to avoid background noise and to minimize any interruptions. For best viewing, be sure and use a reliable internet connection, log off your VPN, and close any programs or browser sessions running in the background. If you experience any delays, simply press F5 to refresh the feed. The different tools on your webinar console can be clicked, moved, resized, or closed. Maximize the tool to full screen by clicking on the icon in the top right corner of the widget. We encourage you to check out the content provided in today's widgets. Questions for our presenters are encouraged and will be answered at the end of our session. Please submit them through the Ask Questions widget. If your question is for a specific panelist, please include their name with the question. Before we introduce our panel today, we thought we'd do a quick interactive poll. The pandemic has served as a widespread test case for the effectiveness of digital solutions, many of which will become permanent fixtures and lead to long-term changes for many businesses. We're curious to know, as I make the poll live, we're curious to know which of these digital or online activities did you do personally during lockdown? Please select all that apply. We're going to be giving our guests 30 seconds today for everyone to respond. Okay, making sure everyone's provided their input. Looks like we got a lot of responses. All right, let's see how we did. All right, looks like everybody was ordering groceries, alcohol, and takeaway. Thanks, everyone. It's great to see that everyone's been taking full advantage of the variety of digital and online activities during the disruption. Now I'd like to introduce today's moderator, Milena Malev. Milena is the General Manager of Financial Services and Insurance at CoreLogic, leading the business strategy and growth of our banking and insurance solutions. She has over 20 years of banking and financial industry expertise, encompassing credit risk and PL management, as well as the digitization and commercialization of solutions across customer banking, insurance, and wealth management. Welcome, Milena.
Thank you, Jonna. Welcome to CoreLogic Digital Mortgage webinar. I hope you're all well. It's great to see we've got some people in the audience who learned new TikTok dance and also became an Instagram influencer. It's all great. Over the last few years, our industry has experienced significant disruption. It's certainly, we've seen some good and interesting times in the financial sector. We've seen an uprise in challenges to traditional banks on the back of Royal Commission, which certainly demonstrated the need to transform the industry in the interest of consumers. And more recently, we have experienced profound shifts in consumer behavior on the back of global pandemic, which certainly accelerated digital transformation. It affected every industry, and mortgage industry is no different. In today's environment, the importance of data has become absolutely critical. Technology is now at the right level of maturity to support digital transformation required, and we're seeing data capabilities being at all times high. So digital mortgage is now a reality. So in Australia, today we're seeing 3 to 6% of new loans are approved digitally. In the US, digital mortgage solutions capture more than 25% of the market. So international experience really shows us that very quickly, digital mortgage application is becoming absolute minimum expectation of consumers today. I am delighted to be hosting webinar with experts and leaders from the industry who have helped many Australian families to own homes of their dreams via a digital mortgage experience. I'd now like to welcome to our discussion today, Melissa Christie, Head of Lending at 86400. Melissa has been with 86400 since the beginning of 2018, leading the mortgage business. In this role, she has developed the home loan solution from scratch for broker channel as well as direct to consumers, and is now responsible for the end-to-end mortgage business. Melissa has over 16 years experience in the mortgage industry, both in Australia and the United Kingdom. Sean Lawden, Chief Product Officer at Nano Digital Home Loans. As an experienced business leader and expert problem solver, Sean specializes in fintech, digital products, and consumer banking. He focuses on building and managing customer-centric products, placing them at the heart of the journey. Sean draws on his diverse experience across UK, Australia, and Africa. And Joseph Seychelles, Chief Risk Officer at Athena. Joe has worked in financial services sector for 25 years, holding a number of senior risk, credit, technology-related roles in both the domestic and offshore environments. Joe has deep experience in managing large operational teams with a key focus on driving technology and managing change to the benefit of the consumer and working with regulators and key stakeholders to achieve that aim. As the CRO for Athena, he is leveraging the power of data to allow efficient and effective operations and business decisioning. What a stellar collective experience we have in today's webinar. Welcome all. According to McKinsey's study, COVID has accelerated adoption by about 5 to 7 years. Joe, interested to understand how COVID impacted Athena business.
Yeah, so first of all, thank you for that very kind introduction. First of all, the thing that really jumped out of you with COVID is just how your business end-to-end needed to be really agile. So it's easy to think about the disruption that it caused in our business, but from the consumer perspective, the disruption that was caused to consumers in their ability to purchase, their ability to sell, their ability and disruption in their own employment was something that really forced the organization and Athena to really look at itself and make sure that it was agile and being able to adapt to that and respond to consumers. And so I don't think we want to forget how much of an impact that's had on our consumer base. I think what we've seen, and that permutated in sales taking longer, processes being disrupted, and many restarts along the way that we had to factor in. I think the real positive there is that it has shown as a real accelerant to the take-up of the digital process again, right? So just as the poll you showed here showed that many people are doing everything digitally, many people have now fully embraced the digital process. So I think we're seeing a new, fresh cohort of people adopting the digital processes and seeing that it's just normal now, as it is. Again, positively about the digital processes are it allowed us to scale up and down easily. And so as we saw this new cohort of people coming across and trying the digital processes, the ability to scale with that was a real positive that we were coming through. I think some of the risks we saw here was that it really put tested your process end to end. And so what you did see, it wasn't only what we were dependent upon in Athena, but also all of our third parties. So whether it be someone we use for fulfillment services, whether it be someone we use for valuation processes or our VOI processes, it tested you end to end right across because the consumer sees you that way. And to some extent, some of the legacy processes that you may be using in your digital process for certain requirements get tested. And I think the real positive is now we've seen that we've been able to move on to a real digital end-to-end platform and that be accepted and tested with significant volumes coming across. So we're really now seeing that digital process, that digital end-to-end component is not only required, but expected from the consumer as something that they are expecting to deal with.
Yeah, it's absolutely challenged the mindsets and attitudes and challenged the organizations. Melissa, when COVID started, 86400 already launched broker solution into the market. Did it have an impact on you guys?
It didn't have an impact on the solution that we launched because the solution we'd launched means that brokers don't need to meet customers in person, and everything is done digitally, so there's no physical documents that need to exchange hands or signed or that type of thing. So it didn't impact in that way, but obviously we had just launched to market into the broker channel, and given the first round of COVID was so unexpected, no one knew what to expect. It wasn't the time for brokers wanting to learn new technology, try someone new they didn't know that had a different process. So it definitely prohibited it, I guess, in the early days, our growth early on.
Interesting. And Nano, you guys were in the process of launching when COVID started. Did it accelerate things for you guys, Sean?
Yeah, so I guess COVID's been somewhat of a perfect storm for Nano. So we've the first lockdown actually hitting our Series A, and then the most recent one actually hitting us right in the middle of the launch, our public go live. It's actually been positive on the whole. So a couple of things: the Nano team were very used to collaborating in the office in person. So we were unsure how that kind of full lockdown hit we'd take that initially, but team have proven to be very resilient, and being an agile fintech, we're all set up for that. So that went very well, to be honest. On the customer front, it's proven to be largely positive too. So don't get me wrong, we were very nervous on the 1st of July, as or just prior to that, we'd planned a fair bit of above the line marketing. But I guess as all good fintechs do, we pivoted fast to more online, social and TV ads, and that proved a massive win for us. So we all really believed in the product offering, and that proved to be the winner in the end. We actually hit 100 million of loans settled in our first month. I guess if you couple the stay-at-home orders with the overall market dynamics, we've not touched on them yet, but lower interest rates, rising house prices, astonishingly high refinancing rates. We were that's the signs of a perfect storm for us. So it's clearly a great time to be in the digital home loan space, and we're just getting started. So it's definitely been an accelerant, and there's a lot more to come.
It certainly sounds like it was perfect timing for you guys. Let's take a poll and see how it impacted various financial institutions and what initiatives the industry prioritized when COVID started. Do we have the results, Jonah? Oh, fantastic. And no surprise, I guess the digital transformation and acceleration was an issue for everyone, and everyone adopted during these challenging times. Historically, there has been a perception of the importance of human interaction as part of the mortgage origination process. And we've seen many financial institutions that have been looking at human-led and digitally enabled solutions. I know Nano absolutely prides itself on creating a truly digital experience. Sean, do you think the mortgage experience still requires human touch, or we just so overcomplicated it over the years in the industry? What's your view?
Yeah, to varying extents, yes and no. I mean, I believe us lovely humans will still have a future in mortgages for a little while to come. But it's absolutely true that the mortgage process is way too complex. A lot of studies that we receive, like, the consistently show that almost up to 3/4 of Australians say that home loan process is complex and confusing. So that's got massive room for improvement, right? So I guess it's also one of the things that we look at, the fact that brokers in the industry make up that 60% of the market flows, which if you dig a little bit under that, it's a very telling story. So it not only highlights that the home loan process is confusing, it's so confusing that homeowners have to look to the brokers to provide that advice and support in what is often a very opaque marketplace. So asking the questions like, am I getting the best deal? Is there a catch with this one? Have I got the right information? Can someone please help me, right? Brokers provide that manual intervention to help customers navigate and answer those questions. And they do a really good job. But we believe that by simplifying the process and making it easier and more transparent, and for customers and brokers to digitally self-serve, you'd naturally expect to see a drop in the need for human intervention over time. So, but one thing that we realize is that not all tasks should be automated. So there are truly value-adding tasks that should be led by humans. And at Nano, for example, if we get a complex application come through, or the algorithms that we've programmed aren't sure about something, we've built our workflow so that our system has already structured the data for our underwriters so that they're only drawn to things by exception. So if a loan ever does get referred, so they're most certainly not reviewing the whole application again, like seems to be the case in many other places. And this speeds up our manual human time to yes, as well as that digital time to yes. So, and the great thing about, I guess, having new technology and new systems is that it's all auditable as well. So you've got a clear track record of the whole thing and there's no paper in sight. So I guess in summary, yes, there'll always be a place for people. But as some customers, particularly those with the more complex end, are going to need support and specialty advice. But I think that human touch is just going to look very different.
So we're hearing that we definitely need human for complex interaction. Joe, is it really only relevant for simple vanilla mortgages, or you think there is a room to automate and digitize more complex loans?
And again, this is as Sean pointed out, there are mortgages and there are mortgages, and I like to think about this in, if you look at a different industry and you look at something like a tax return. Right? A tax return used to be a complex process for some people. Now they turn up to their tax agent or jump into their MyGov site, and most of their data is available there, and really they're just confirming it and going on. As more and more data becomes available online and accessible, more and more of those simple applications will just be completed and put through. And so that's without a doubt, the automation there is already playing with all the players a very large piece in actually bringing that data together and providing real convenience to the consumer to allow those simple mortgages to largely be completed and to largely get through with a really light touch automation coming through. The problem is that mortgages aren't what mortgages used to be. Mortgages are now becoming transactional vehicles. Mortgages are now becoming wealth creation programs. Mortgages are part of a portfolio construction. So as more and more of that comes into play, I think there's always going to be an element of human intervention with that more complex component of that. But that doesn't mean to say that technology doesn't have a large part to help in that. If you talk to consumers, where they get really annoyed is where you ask a question and then a week later you ask a question, then a week later you ask a question. How the technology helps the people in financial organizations really understand what is the exception, what is it that we need to ask. You deal with that up front and you make it a seamless, frictionless process to really get to the nub of what needs to happen to help this consumer get to where they need to be. So it's about the technology in all cases helping it become super quick, super efficient. But for those complex loans, I think there's going to be a level of human intervention on the things that really matter.
Yeah, absolutely. And Melissa, 86-400, you've gone first with the digital mortgage, and recently you've launched the direct-to-consumer proposition. Interested to get your views on the importance of human touch and how it varies across these different channels for you guys.
think you're on mute, Melissa.
Yeah.
Sorry, I had a dog barking. That's why I put on mute. Human touch has played a big part for us. We launched exclusively through the broker channel first, and we did that because we know that one, we were a new bank and an unknown bank, but also just we know there's a huge percentage of customers that's have complex scenarios that may benefit from a broker, but people that aren't as sure about what they're doing. So for us, it gave 86400 I guess a face in that they could speak to a broker about us, and it that's helped us I guess get on our way. And now we have our loans are available now through 90% of brokers in Australia have access to our product. So that was important for us. We've obviously moved on since then. We now offer loans in 3 ways to our customers. So broker is obviously our biggest channel at the moment. We also can do loans over the phone with lending specialists. So they make an appointment and we can do it all over the phone for the customer. And then we obviously have our direct do-it-yourself channel online. And what we're finding with the online channel is that customers, obviously they have the option to call or chat, but we find that most go straight through and that we don't actually speak to them unless we need to in the assessment process, but for the application part. But I must say that they are more vanilla deals. So one security property, only want a couple of splits. Anything else we do, if it's more complex, they want to cross collateralize, or they have, they want to do multiple applications at once, then we would either refer that to a broker or do that over the phone. As far as assessment goes, I think we're definitely heading to a straight through. I don't think everything will ever go straight through. There's always complex deals. There's always scenarios where you need to do a bit more digging, but definitely we're now on a path where we want to send a large percentage of our deals straight through. And I think there's obviously the way we use data and what's available, it's a lot easier to do that now.
It's fantastic. Jonna, do you want to take another poll? Sorry, Sean?
Yeah, sorry, Milena, I was just going to add to that. It's that whole conversational, making the digital more conversational is coming into play a lot more as well. So, rather than just having that kind of static form, you've got the ability for the customer experience to kind of branch out in the digital space, which is going to be changing things a lot over the coming months and years.
Yeah, absolutely. So there's definitely no one size fit all, and there is always complexity around the process where consumers would want to have that conversation and human touch is required. We're just doing another poll to see the results from the audience and what are the thoughts in relation to use of technology and data and automation. It's interesting to see that the view is actually around the eligibility assessment and understanding of how well the product fit for the purpose, and around settlement, that's where the majority believe the human intervention is required. It's interesting insight for all of us. So over the years, we've seen a great use of data analytics and technology across financial services sector, and it's mainly been in credit risk, in fraud and marketing. However, it would be fair to say that in general, the industry struggled for quite some time to really collate, curate and monetize on data assets via improved services and solutions. So Melissa, 86400 is the market leader when it comes to the way you guys use credit data, transactional property and other data to support digital mortgage journey. Can you share with us the importance of data in your business model, and how do you think about data in your organization?
Yeah, data is key for us. We set out from the start to not have any supporting documentation for a home loan when it gets submitted. So we are completely reliant on data, and data that's verified up front. Obviously, we collect income and expenses electronically from customers, and that's a big part of it. But also things like, the CoreLogic rental AVM factors in, so we don't have to get lease agreements or letters from real estate agents. But I guess our whole model was we want things to go straight through, but we also want to reduce the impact on our back office. We were a lean, mean business, and so we need to use the data to make all our decisions. So for us it's key, and just replace with a scrape of an income, for instance. You can check things like employment history and all those type of things that we haven't done in the past. So it's definitely key for our business.
Fantastic. And Sean, I was doing some research, and for Nano, I believe the fastest you can reach conditional approval is about 9 minutes and 41 seconds, which is quite a fascinating result. And you've challenged the traditional origination process and really solved the puzzle of fragmented lending process, which leads to better customer experience and faster approval rates. Can you share with us how you differentiate yourself in origination space when it comes to data and technology?
Yeah, look, so thanks for calling out the fastest loan app. Like, we're very proud of that one. So it's actually 9 minutes 41 seconds to a fully unconditional approval. So just kind of taking that in. So under 10 minutes to a fully unconditional approval, ready to settle. So not a digital form that you fill in online and get someone to review or give you a phone call in a couple of weeks, or a pre-approval, which is commonplace out there in the market. So what we've built in under 10 minutes, we were able to capture all the relevant data from the customer, let them digitally share their banking data with us, complete our income checks, credit checks, valuation, serviceability, KYC, VOI. So you've got literally certainty you're either approved or not approved right away. So there's no sitting there waiting, hanging around with us. Look, I know better than anyone that home loans is a highly regulated space. So when I was at Barclays Bank in the UK, I led a remediation project on the distribution channel there. So I've got deep experience of what can happen when things go wrong. And a home loan does have a lot of processes to think about. But what we've done at Nano is we've managed to overcome that kind of patchwork approach that is common out there by running multiple parts of the process in parallel. So via our platform, we overlay like the strong, streamlined governance processes that are all automated, and that's what enabled us to achieve our record speed approvals. So I guess we're actually recently awarded a innovation patent from the Aussie Patent Office that specifically acknowledged that part of our journey, which is the real-time digital application decision engine. So I guess we're very proud of that. And what we've also realized that does for us and businesses in general, and this is kind of the stomping ground for every digital home loan provider out there at the moment, is reduce that time to yes, but also dramatically reduce the unit economics. So I guess which we were able to then pass back on to the customer with low rates and no fees. So there's definitely, I believe kind of soon it will become the norm. And the great thing is that kind of Nano are leading the way in that front.
It's fantastic. Definitely something to be proud of. Unconditional approval under 10 minutes. That's fascinating. So Athena prides itself on agility, speed to market, and superior customer experience, Joe. And I'm interested to hear how is innovation in the use of data changed really the experience for your customers at Athena, in particular around customer engagement and credit decisioning.
Yeah, so I'll come back to, because I think the speed conversation is a really important one. And actually, when you look at your portfolio and you see actually what proportion are improved in either, whether they're 10 minutes, 15 minutes, there are all sorts of claims there in the marketplace. A lot of that comes back to the personal choice of consumers, right? So not all consumers do want to upload or give access to financial statements. Some do. And I think the gamification process that we've undertaken has actually helped consumers understand the consequences of their choices if you choose to allow your data to be uploaded, if you choose to allow a valuation type to happen, if you choose to make other choices, then actually your likelihood of approval and speed of approval increases. And actually the gamification of that is giving people these ready indicators around their choices along the way. So at Athena, we really pride ourselves on giving the choice to the consumer about how they want us to use their data, how they want to allow us to get access to their data and coming through. As Sean mentioned, we still have all the same regulations that we all need to meet, and their choices often have impacts on what we do. And the gamification gives the consumer the quick sense of what the impact of those choices are. If you want your loan approved super fast, then you upload your data, we run our processes, because in reality, the 85% of the loans we're talking about, if you can verify income, we can simply run a valuation process. You can upload expense data. They're really the elements that you do need to actually approve the vast majority of home loans, right? And consumers allow you to make those choices. That gives you the ability to really process that at speed. But actually, again, we believe that's a choice for the consumer, and we actually indicate through the application process the impact of those choices and the likelihood of the outcome of that to the consumer, so they can actually get a good sense of how they're managing their application.
It's absolutely wonderful to see how the use of data and technology really removes that friction from the overall mortgage experience, and it's heartening to see our customers and consumers really benefiting from the great innovation that you guys bring into the market and superior experience. As we're talking about removing complexities out of the process and the adoption of really sophisticated automation, we know that it can create sometimes challenges, in particular around transparency. So Joe, how do you manage the transparency around decisions, in particular when customers actually get the news that they don't expect?
Yeah, it's a fascinating one, because we've all talked about the speed to delivery, but that speed can be the outcome that a consumer wasn't expecting as well. And there, that begins the journey on now how someone is not only potentially a customer today, but potentially a customer tomorrow and in the future. And so really working on explaining and playing back to the consumer the rationale for the decision, right? And helping the consumer understand what can be done by the consumer to position themselves more favorably going forward, and what steps they can take. Also providing data to the consumer. So it just may be the reality is that, you know, the prized home in the prized suburb is now become out of reach for that consumer. But actually, what other property data could we give that consumer to allow them to understand adjacent suburbs that may be more affordable, may be within their reach? And so looking at understanding what the outcome that the consumer is trying to achieve, and how our data is showing, well, where that's a problem, what they can do, and what other choices can they have, right? And so what we often see is that in some of those declines, it's actually a customer 3 months, 6 months, 12 months in a journey, as we've been around for a little while now. We're seeing that consumer engaging with us on how they ultimately get to where they want to be, rather than just saying a simple no.
Yeah, absolutely. Building advocacy through that process as well, while you're helping them to understand the decision and maybe look at some other options that are available for them. And use of data and insights also provides enormous consumer behavior trends, and shows some opportunities around innovation and process improvement. Sean, how do you guys capture the customer feedback and you improve your solutions? And what do you hear from your customers on the experience that you created?
Yeah, so look, feedback for us is absolutely paramount, and we've got our ears to the ground continuously through kind of all the tools, Trustpilot, Full Story, social media, customer surveys. All of our data is driven from that customer voice. But so we actually spent our first few months of life in beta testing with our friends and family, and through that process, we actually got a lot of interesting qualitative feedback. And to Joe's point, where he was talking around, customer choice and understanding if they are willing to give more, they're willing to get a little more, like positioning certain things in that digital mortgage flow so that they're more conversational. And we really kind of sweat the real small stuff. And one interesting thing that came out was, because we'd run the process in parallel behind the scenes via the platform, we could actually surface a decision kind of immediately once all the information had been set up. But a lot of the customers were a bit spooked out by that. So we actually put a little kind of progress panel bar in that showed that we were assessing something. It's like, we've got all the information now, give us some time. And we wouldn't have caught that type of thing if we hadn't spoke to customers and understood kind of where we're at. But now that we've actually launched, we use full story very often. We've kind of ticked over our 100 odd reviews on Trustpilot, and look, we're always listening to what customers are saying, which ultimately feeds into our product roadmap as well. So we love to celebrate the good reviews, but we actually focus on what our customers want and are not happy about. So similar, I imagine, to Melissa and Joe, we know that customers want more flexible loan structures and loans for new property. So that's obviously the first cab off the rank for us. So we'll be launching new purchase imminently. And I guess in terms of kind of CX, one thing that we do differently to others on the market is that transparency to tell the customers yes or no straight away. So we celebrate a fast time to yes, but just as kind of Joe was mentioning there, we also got a very fast time to no. We know customers' time is very precious, especially in a hot property market. You just need to, we're not leaving customers hanging, feeling anxious or worried. And I think that's going to become a key demand as well, just that fast time and certainty.
You're managing expectations early on in the process is very important for consumers. Melissa, what about brokers, how they react to your solution and how you use data to add value to brokers on their process as well as direct to consumers?
Yeah, so brokers are very verbal about giving feedback. So that's a constant thing that we're working through. When we launched our mortgage, that was just, that was the start. I mean, we've made hundreds of changes since we launched based on feedback and based, on seeing how different scenarios go through the funnel. But I guess what we do, and I think Athena and Nano do it too, is the way we display back to a customer their income and expenses, particularly their expenses, I think highlights to a customer actually what gives them a bit of a reality check on what they spend their money on today. And I don't think a lot of customers actually know, most lenders obviously go through a declared model. We don't. We play back to a customer what their expenses are, and then in our direct flow, they can adjust that. And it's about, well, you're spending $2,000 a month today on groceries. Are you going to be able to justify that $2,000 a month going forward? And is that representative going forward when you take out this new loan? So I think it gives people a chance. And obviously the conversation that brokers have is, here is what you're doing today. How are you going to pare this back when you take out this new property or take on this new loan? And another thing, I guess we've been in market for 2 years now. So one of the key things what we're doing with all the data we have based on all our applications is really reviewing and working out where the key points that we can send applications for purchases and refinances straight through and where we're going to get the best results for that. So that's a key focus for us right now.
Fantastic. Obviously, fintech is a very competitive landscape. How do you guys retain the competitive advantage? Is it about sustaining innovation, meaning improvement on the existing solution, or you see it's all about the new technology trends and new ideas? Who would like to take that question?
Yeah, I'm happy to jump in on that one. I guess, look, from our side, where we're you, in a technology landscape, things move so quickly, and what was in kind of today might not be tomorrow. Fortunately, home loans doesn't move as quick as social media does, otherwise we'd be in trouble. But it moves very fast, right? But when I think about how lenders, like including Nano and 86400 and Athena, are going to stay competitive, kind of boils down to four things. So, and it's largely around where you're investing in. So for the other businesses that are on the line as well at the moment, I think the big one is improving your time to yes. It's about reducing your unit costs. And it's about building agility into your tech and data platform. And then the final and probably most important one is, winning the hearts and minds of your customers. So that continuous feedback loop. So Nano, as I'm sure every other company is trying, will focus on maintaining its edge across those four things, as well as others as we kind of expand. But I think that third point is really important. I think I think it was Joe and Melissa touched on it just before, but in the future, like what's trendy now might not be. So having a agile and a tech and data architecture that allows you to be nimble is going to be paramount. So fortunately, that's part of our a lot of our DNA of the companies on the call now. We talk about doing things in sprints, not in release, like annual release cycles. So it's easier for us to stay up to date with trends and actually deliver them. So yeah, that's kind of, I think those four things are going to be the most important.
Yeah, I totally agree. But and also acknowledging that it is also much easier to move quickly in a smaller organisation than a bigger organisation. We've got a new tech stack that we built. We realised early on that some of the solutions we had in there weren't ideal, so we've had to pull them out and plug another one in. But building something from scratch, you have the opportunity to make those changes. But for me, both our broker and direct business it's constantly changing every fortnight, every sprint. We have new features going in, or we're fixing friction points. So for me, it's never going to be finished, and we have to continue to keep up with the competition or keep ahead of the competition.
All three of us are really lucky in that the major people we're competing about have given us lots of rich, fertile area to innovate in. Right, so keeping to our promises of really driving benefit to the consumer. Because to be honest, I think most of the technology we talk about is behind the scenes, and consumers expect it to just work and be easy for them. But if we take it back to how we remain really competitive, it's break what is broken in this industry. If we think about this industry where a new person gets a much better deal than someone who's been 25 years with an institution, it makes no sense, right? So propositions like no back book, no front book, propositions for as you pay your home loan down, you get a better rate, helping a consumer really achieve financial freedom. Right? They're the areas that really keep this industry at its competitive edge. Right? What makes us agile and nimble makes it difficult for others to compete in those areas, and that's how this industry will really differentiate itself.
Yeah, fantastic.
Yeah,
definitely.
great.
Agility and flexible infrastructure and ability to react very quickly to customer needs is the key. I think, Jonna, we've got another poll. Let's have a look at what our audience thinks about the future of data and technology.
There we go.
here you go. It's open banking data certainly will provide a lot of challenge to the industry and opportunities in the space, but AI adoption and streamlining processes as well as serve self capabilities is something that will make a big difference to the industry going forward. It has been a wonderful conversation, and as we start closing off the discussion, interested to hear your thoughts about what's next. Really, we've talked about how to stay competitive, but what's next? Is it really about logical adjacencies to the home loan journey, which sit outside of the traditional application process itself, or it's all about further innovation in the core mortgage product and how customers really interact with the digital mortgage? What do you think, guys? Where do you think we're going?
So I think, like to Joe's point, the ground is very fertile in this space still, and there's a lot more to do. One that is interesting is the house kind of CDR and open banking and giving that back the control of data, and then when payments comes into that as well, so like initiated payments, pay to, that's going to be really interesting. So you can kind of think like one of us three on here, having a customer that we know has 100,000 sitting in a savings account with Megabank, less than 0.5%. And it's been sitting there for a while. We could prompt them to say, do you want to move those funds into your offset account to save X%, right? That, actually helping customers become more financially savvy and more financially aware, and being better off. Like those are kind of the types of things. And as it kind of expands into telco and energy companies, you can kind of see periphery deals kind of come off the back of that. But there's a lot of opportunity, even just in the market right now, the home loan space just itself, the ecosystem that surrounds it, improving that time to yes, right?
Yeah, absolutely.
Yeah, and I think the whole, no one's, I don't think has really nailed the whole self-serve from the app after settlement piece. And I think, we all have call centres where, people ring to make changes to their loan. I think there's a big opportunity to get all of those maintenance and things you want to do with your loan, as well as provide insights about your property and your loan, or give you information about changes you might want to make to your loan in your app. I think that's something that's next on the agenda.
I see two areas where I think that there'll be innovation outside the application process. I think one, just greater loan portability. Right? So I've got a loan, I want to move it to another lender who's giving me a much better rate, much better deal. That's just got to be easier than it is now. The complex discharge process where, customers are being harassed by saved calls and all sorts of processes to frustrate them. Really, as an industry, I think we've got to move to the point where customers made the decision to move, and that just moves, just like you move your phone number, right, coming across, and really get that true portability of loan, not just through from one provider to another, but as you're moving from one home to another home, right? Not having to go through this complex process of reapplying for loans all the time. You've got this mortgage that you're taking through multiple components coming through. I think the other piece is, and many of us touched on this, is that a mortgage isn't just a mortgage, it's part of a wealth creation strategy in time. I think us giving the ability for industry to give people real lifetime positioning of where their equity stands today, with live feeds of data and what choices and options that consumer can take as a result of that, and looking at that and saying, how can I really better myself with this decision? And I think as more and more data becomes freely available and integrated into application data, or to a consumer's position with any credit provider, I think the provision of that data to the consumer will present choices that actually could really help, again, kick this industry to another level.
It's fantastic to see and to hear your thoughts on how we can make life easier for consumers, give them more choices and give them ability to improve financial well-being with help of leadership from you guys and financial institutions that you created. So I think now is opportunity where we can give opportunity to audience to ask some questions as well. Jonna, I'm just checking if we've got any questions already.
We do, Milena. We have quite a few. We might not be able to get through all of them today, but there are several in there for our guests.
So let's start. We've got one question from Alicia from Heartland. You've talked about listening to your customers, giving them more choice, using data to reduce friction. But interesting, those on the call haven't indicated that new product development is on their roadmap. What are your thoughts on creating new products to meet customer needs rather than the typical vanilla mortgage?
It's an interesting one, I guess, in terms of actual like innovating the product itself versus kind of adding new features. I guess there are some really interesting spaces in that kind of look at helping people to unlock equity. You know, there's a big market out there with kind of unencumbered properties that could be potentially tapped into, that could see some innovation in that space to help kind of the new generation get on the ladder. But there's definitely appetite for that. I just do think that there's still so much work to be done in just the normal home loan space that it's going to take a little while to get that bit done first, which is probably where the whole kind of new element will start to come from after that ripeness has been taken away.
Yeah, I think when you're comparing the digital process, when you're comparing the digital processes that are being offered today in comparison, there's quite a bit of innovation in that in its own right. But I think inherent in each of the product are features like in Athena, a product that we've just won lots of awards for in our Accelerates piece, where innovation that says as you're paying your loan down further, we're actually reducing the rate of your loan to help you pay it down further. Right? That is innovation inherited in product features. But I think, to be honest, there is so much, as I said earlier, rich, fertile ground to fix what's broken in the product set and the delivery today. That still is going to be the main attention for some time.
We have another question from Ian from Bankwest. Can the customer broker see the data you collect? And if so, how do you handle challenges? Example, the expense was a one-off, not a regular expense.
Yeah, so in our process, yes, the broker, the data that the customer scrapes on their income and expenses populates the application form. So the broker has visibility of what the customer spends in all their categories, and then they can comment on that data if there's something, you know, they put in a pool or they bought a shed that's something that's not going to be a regular monthly occurrence. Then they can comment on that in the application form, which gets sent through. Mm-hmm.
Yeah, similar to. Yeah, very similar to us, surfacing it up so that kind of one-off adjustments can be made if we see them.
We have another question from John from Commonwealth Bank. What plans do respective panel members have to drive influence further digitization of documents in the property industry, particularly standardized industry documents such as contract of sale in purchases? Thoughts on smart contracts? Anyone would like to take that question?
There's some interesting companies out there that are playing in this space at the moment. I guess in the OCR, it largely depends on the standardization, but smart contracts and kind of, I know blockchain can seem out there, but is definitely a pathway that a lot of them, the companies are working through at the moment. And then I think from a Nano's perspective, it would be about just integrating with a third party that is able to do that and adding that to the tech platform as a capability.
Yeah, I mean, I definitely welcome change to the documents. The contract of sale is the only document we collect today, and if we could get rid of that, that would be amazing. But yeah, I'm not sure on the solutions for that.
More in general, the contracts even that each of us are asking our consumers to agree to. Athena's done a lot of work to really drive those to very simple human English, so that consumers really are understanding what they're getting into. It's fascinating how many queries and questions we're getting about those contracts. And it's just because we've put them into simple, easy to understand English. Many things that consumers in the past would perhaps sign and not really understand, right? But if you're really driving that simplicity and transparency to the consumer, that's a pathway you need to take. I would really very much advocate for broader industry to really simplify those contracts so that consumers can understand what they're actually agreeing to.
Sean, we have quite a few questions for you. I'll choose one of them. We've got a question from Commonwealth, 9 minutes, 41 seconds. What type of transaction was that? Refinance or a property purchase?
Yeah, so that one was a refinance, and yeah, the customer was kind of ready to go, soup to nuts. So it's but there's definitely a lot of opportunity in that space now to kind of build that up from, and where we're seeing the percentages of people that do go through straight through, like we're setting up that our optimization stream that kind of pushes more and more down that path. But as kind of Joe mentioned earlier, it is largely down to the customer to be ready. So single versus joint applications. Sometimes there is the applicant one will start, and then their partner might not be around, or their plus one might not be around, so there'll be a delay. But generally speaking, if you time it from when the amount of effort the customer is expending through the process, that's the kind of time frame that we're looking to keep to a minimum. But in short, it was a single refinance.
Thank you. I think we've got 1 minute left, so I'll just provide a few more commentary, and we'll close the webinar. I would like to thank our panelists today for incredible insights and expertise. It's wonderful to see the transformation that the industry is having right now, and the opportunities it presents with the enhanced use of data and technology. We're sure to see more great things to come from visionary leaders like yourselves and your respective organizations. Thank you all again for this fascinating discussion.
As a reminder to all of our attendees today, we will be sending out the recording of today's webinar via email. And then on Thursday, the on-demand version of the webinar becomes available. You'll simply access it with the same link that you used to log in for today's webinar. For those questions that we weren't able to get to today, we will make sure, if you've indicated a particular panelist, we will work with them to get responses for you. And finally, thanks again. We look forward to having you join us for future webinars in our banking and lending webinar series. Thanks, and have a great day.
Thank you, guys. It's been an absolute privilege to have you on board. Thank you.
Thank you.
Thank you.
Bye-bye.
Bye.